Hey, welcome back to another weekly update. Today I wanted to talk about our Aussie banking system and why we need smaller banks. But first I wanted to look at what banks actually do, as there's a lot of misinformation out there. You've probably heard that banks are financial intermediaries. So that means that they take money from depositors and they lend it out to borrowers. They are the middlemen that make this transfer happen. But this is actually not what happens. Banks are not financial intermediaries. They're actually in the business of purchasing securities. So what does this mean? Well, let's say that you deposit money with a bank. What's actually happening here? The bank is not really holding money for you in an account. Rather, what's happening is you are giving the bank a loan. And because you're so nice, you're lending them money at a very, very cheap rate. So if you've ever looked at the rate you would get on a savings account, this is the rate that you would be lending money to the bank. Okay, so banks aren't taking deposits. What about the other side of the coin? What happens when banks lend out money? Well, we're told that banks take deposits from savers and lend it out to investors, but again, this is not what happens. Remember, banks are in the business of purchasing securities, and that's exactly what they do when they lend someone money. So when a bank lends someone money, what they're actually doing is purchasing a promissory note from you. It's a contract that says you will pay the bank an X amount plus interest for newly created money that the bank will give you. And this is key. This is not money transferred from saver to investor with the bank in between. This is newly created money the bank uses to purchase promissory notes issued by borrowers. It's very important because it's this kind of money creation that shapes our economy. So rather than the central bank, it's actually your local bank manager that decides who gets funding and which businesses are able to get their projects off the ground. And of course, depending on the purpose for which the money is created, we can have economic growth or we can have asset bubbles. Okay, so if we look at our Australian system at the moment, we have a very concentrated banking system. Our big four control 80% of the home loans, a similar amount of the total loan market. Banks down under are also very profitable on a relative basis. They're more profitable than other banks around the world. So why is this? Well, it's not because banks are amazing at what they do, the big four. Our banking system is concentrated and profitable because they get regulatory help. For example, the big four are allowed to calculate their own risk weightings. The way it works is a bank has to hold a certain percentage of assets, which are deposits, on hand. Usually these reserves are held with the central bank. So a minimum the banks might have to hold is about 10% of their loan book. So if a depositor loans a bank, say $1 million, then the bank is able to create $10 million from that million deposit. Not all loans are equally risky, however. Business loans with no collateral down are likely more risky than a mortgage where a borrower has a huge income and puts 30% of the deposit down for the loan. Well, the big four have been granted the privilege to calculate the risk of these different loans. So what this means is the big four can say their loans are less risky and allow them to lend out more to the public. A small bank cannot do this. That means they're constantly competing against the big four at a competitive disadvantage. The big four banks are also backed with a federal government guarantee, meaning the government has graciously offered taxpayers money to bail out these banks whenever needed. But why is this a problem? Why does it matter that we have four big banks in Australia? Well, in such huge institutions, a certain level of accountability is lost. So we've seen this come out in the Banking Royal Commission. We've got employees of the big four who are dishonest. They've charged clients for fees they didn't actually, they've charged clients for services they didn't actually receive. And it was largely because they were operating under short-term incentives and the veil of a large institution. This is something you don't really see at small banks. So with local banks, trust is a priority. Local bank managers know their clients by a first-name basis. They're also not interested in lending to these large corporations like the big four. Their aim is to make their local customers happy. So not only do you get more trust and less malpractice, you also get far much more money created for these local economies. So local businesses and family-owned businesses are priority of these local banks. The big four would rather lend out hundreds of millions of dollars to large corporations because of the bonuses and the fees are much higher. But this is why we need these local banks, so we can spur these local economic growth on. With local banks, borrowers win as competition is greater for business. Depositors win because they're generally not lied to about products that they need or don't need. Local businesses win because they get more funding. Local economies win because they have these businesses growing within their local economies. Taxpayers also win because these local banks don't get into the tough crises that these big four banks get into. Like, for example, in 2008, when large banks were betting on high yield mortgage-backed securities, that market blew up. So all these investments that these big banks had made had gone all the way under, and guess who pays? It's the taxpayer in the end, basically. The government funds these banks through taxpayer money when things get in trouble. Local banks don't participate in this kind of activity. So they're far more concerned about these local economies and these local borrowers. What we essentially need is these regulators to stop giving preferential treatment to the big four banks and allow small banks to thrive. Everyone will be better off for it, except of course the executives, but I guess who cares about them?
Remember to like and subscribe below if you enjoyed this video and you want to see more future weekly updates.